Hello, I'm Alex. Today I'm going to show you 4 good indicators which will help you with finding your support and resistances in the price, finding the good entries and good exits, and I've got a couple of examples to help you with that. Okay, let's dive into it. Okay, let's look at this chart of IRBT, iRobot Corporation. Now, what I tend to do is trade the gap up. So we've got pre-market, aftermarket, pre-market. This is aftermarket previous day, pre-market the current day. It starts at about 4 a.m. New York time. So let's so if we take around here to up to where it gapped up, about 23%. So I'm looking for things which are over 20%. Now, I use 4 indicators for my setup. Starting from the bottom, cumulative volume delta, and delta is the difference between aggressive buyers and sellers, and it accumulates over time. And we can use that in our to have a look at the movement of the price. Also, might be quite familiar is the MACD, the moving average convergence divergence, and that's quite good for finding entries. So here's a good entry right at the 4th minute after the open. So this crossover of the blue line above the yellow line. With the RSI, sometimes quicker to find entries and exits, but what is particularly useful is finding divergences, which are in this case where we can see a high here, but a lower here, and I'll just kind of make that more obvious for you. So you've got this high here, and then makes another high here, but on the RSI, it actually goes to a lower. So this divergence is quite interesting for us for knowing when to exit. So I'll just make that absolutely clear. So you see a strong divergence between price and RSI. So the RSI will help us determine when to get out, and we want to come out of this price movement around this area because we're showing a weakening of momentum, which indeed it does, and so our best price would have been here at the 490 sort of level. Don't worry too much about getting it absolutely spot on, but at least we know that there's nothing more left in this move. So the final 2 indicators are we have the EMA 9, which does quite a nice job of when we see price going through it, we know that this is quite a bullish sign, and if it can stay above this line, we know that we can stay in the trade. Even the most simple sort of levels where it crosses on the other side, we could, but with our other indicators, we can get even more accurate exits at much higher levels. Right, and finally, I wanted to show you the this volume indicator, which what we take is from the most significant area from the pre-market, going all the way right to the mark just before the market open, and the value area low, very high, gives us some indication of where a really good support level is, and we can see that even various bounces at 831, 853, and then of course it respected that level quite nicely at about 934.35. So we know for sure that if we can buy somewhere between the point of control, the yellow line, and the very low, that will be an excellent area to enter, because we can be sure of some sort of support there. Okay, so I did mention this before, but I find RSI and MACD work quite nicely together, where you do see slightly earlier entries, but they're more in this case they're more of the same. But whereas I find that with MACD it tends to be a little bit late on the crossover, whereas RSA will give me a much earlier indication as to when to exit. So it's already pointing downwards here, and this crossover here of the RSI line and its average, whereas on this one it happened a couple of candles later. Right, going back to CVD, this when we see the price of the buying aggression coming up and going down, we can see that just here, when there's this quite large aggressive candle, that was a good sign to get out, and particularly the second one. And you can see that these two large candles here, let's make that a bit larger, we can see that on the price it's quite large wicks on one case, but on this one it's quite a large opposing force, and that shows us that around 495 we're seeing this resistance level that can't go any further. So interestingly enough, the aggression does carry on, but there is a divergence between price and aggression. So it's more kind of like there's some sort of defending of this level that's happening, but there's no real it never goes beyond this level, you notice. So we can be for sure that the price won't go up further than this level at 490-ish. And so the CVD is quite a useful sort of further indication of what's happening behind the scenes with the buying and selling aggression. And so on a very short-term trade, this would have been an absolutely excellent move. So if you've got somewhere around from, say, point of control, you haven't got much time to hang around on this one because it's just 1 minute candles, but if you move here would have been about 30%, and so how much ever shares you've bought in that would net quite a nice profit. Okay, we'll finish there. Thank you very much. Okay, as promised, I was going to show you two examples. So this is the second one. This is Victoria's Secret, traded today. That was the 5th of December 2025. And news broke out that they had good earnings at around 7 o'clock. So we had this sharp increase, sudden surge in volume. On the 1 minute chart here, we see our volume profile. It's not quite obvious exactly because it's so thinly traded, but there is some support around this green line here, which was kind of more or less respected to a certain extent. On the 5 minute chart, it's certainly after about 40 minutes, certainly was respected there. So going back to 1 minute, we have a way to trade this one where as price comes down sells off quite strongly, where people are obviously taking early profits, there is on the RSA a spike up, which would be quite a good entry point here, very near to the support level, and you think, well, what is this support or not? Well, the thing is, you've got this very high um, volatility, so it will break through. But you notice that they're just about, there was respecting this level here throughout. There's various wicks here, here, and here. So if you were to get in around this kind of like 447.50, somewhere around this level, that would be quite good. You can see that there's a lot of interest here. On the volume is quite a useful indicator. That there are it's around the sort of 5,000 level, and on the it's the average is around the sort of 5,000. Not particularly high, but you see that there is this interesting uptick here where you see it increases in value by about 5%, so you can get something here. But what's interesting here is that this movement between on the MACD gives you quite a nice idea of when to enter. And so when the blue line goes across, then you can enter there, and then you can exit at this point at the top, very top, where this it crosses over. And as the RSI tends to do that a little bit quicker than MACD. On the CVD, we have continual buyer aggression, plateaus a little bit, but when the real move happens here, then you can follow it there, and then again this selling, quite strong selling signal there, tells you to come out, and you could probably make that in about a sort of 5% move. Not particularly very much, but the technique is there. And say with support, early exits, with price moving ahead of the EMA 9. All these 4 to 5 indicators work quite nicely to tell you when to enter, when to exit. Okay, thanks for watching that. So there you go. That's how to use the cumulative volume delta, the MACD and RSI, the EMA, and lastly the volume profile. These, well, actually there were 5 indicators, but I would say RSI and MACD kind of show you similar things, whereas RSI tends to be slightly more quicker than MACD, whereas MACD kind of shows you the general idea, and it's quite useful for going through multiple stocks, and so get a quick idea of when this divergence has happened on the MACD. You can see if you can get close to this moving away when the price is moving up. Yeah, the volume delta, cumulative volume delta, is quite good for showing it buying and selling aggression, and obviously you don't want to be holding price when you've got this aggressive selling coming down. And then the volume profile is quite nice for showing where you're for a good entry for support. So if you're going to get as near as possible to the value area low, that sort of green line I showed on the chart, and obviously the old-fashioned moving average, the exponential moving average, is quite nice for where the price is showing some kind of like support on the line, and it kind of helps you to see whether early entry is more profitable, and exiting very nicely at the top. And so you want that initial move can be quite profitable, rather than waiting for a dip and then a return. So what I tend to trade is quite on the early volatility. I wait kind of like 10-15 minutes because of this what's called amateur hour. I'm sure you've heard the expression where you get balloons coming up. That means it's time to finish. Right, so trading that initial input of volume, where what you'll see is a lot of these market orders coming in before the beginning, and that will add to the volatility. But if you just wait 5-10 minutes and then make your trade, ideally once you've seen the direction of the move, and you want to see whether in the pre-market you want to see a general upwards trend. If you get spiking at high and then coming down, that's not a great sign. What you want to see is just generally moving up and up and up and up, and then what you want to do is catch is within the first 15 minutes is quite, you could avoid anything in the first 5 minutes because you don't know what's going to happen. It could suddenly reverse on you, but you'll be able to see the general trend coming in at least within the first 30 minutes, and position size accordingly. Think of your risk management, so don't buy put everything into it. You could put say like 1/3 of your total capital onto your shares, and if you're fairly confident, maybe half. But I wouldn't recommend putting absolutely everything until you're absolutely sure this thing is going to move quite well. Okay, well that's it for me. Thank you very much for listening. I hope you gained something from that, and like and subscribe. Thank you.